What's up guys, welcome back to my channel. My name is Wes. I'm a licensed realtor here in Phoenix, Arizona, and you're watching House Hunting with Wes Sutton, where I talk about all things real estate related, and better yet, I help educate you on the process of buying, selling, and investing in real estate. Now, in today's video, we're talking about getting pre-approved for a mortgage and why it's so important to do this before you start going to look at homes for sale. And we're gonna talk about the process of getting pre-approved, what it means, how long it takes, and when you should do it, and why it's really never too early to start this process. And do me a favor, if you find this video helpful, please go ahead and press that like button, subscribe to my channel below, and of course, share this with your friends and family members who are buying a house. I'm super excited to get into the topic of getting pre-approved, so let's go to the show. Okay, so let's start with what it means to be pre-approved for a mortgage. The process of getting pre-approved is so that you know as a buyer whether or not you can or can't buy a house right now and for how much. And it's also going to reassure the seller that whenever you place an offer on their house, that you've already been pre-approved to make this purchase. So let's talk about the first part of that to start. Now, I've talked about why it's so important to get pre-approved before you start going to look at homes, and here's why. Now, I understand that it's way more fun to look at homes online and to just envision yourself buying one of those houses and making memories in it and spending time with friends and family members there. And that's way more exciting than it is to actually sit down and think about, okay, how am I gonna pay for this house and how much monthly is it gonna cost me in a mortgage to own that home one day? But the reality is that we have to know these things before we're ready to buy a house. So what does this process of getting pre-approved look like? Now, it's actually pretty simple. A mortgage lender is gonna send you an application that you can fill out all online, and this is gonna come from the trusted mortgage lender that your realtor recommended. And a side note on that is that you don't always have to use that lender that was recommended to you, but I would say that if they are recommended from your realtor, it's probably for a pretty good reason. And I know from that being in this business that I'm only gonna recommend the best when it comes to lenders and home inspectors, because I wanna make sure that my clients have a really good experience. If they don't end up having a good experience, then that looks bad on me and then my business would suffer. So I would take that recommendation seriously because you're probably gonna have a really good experience, and that's a great place to start. So the lender's gonna send you that mortgage application and you're just gonna fill it out. It's gonna be pretty simple. It's gonna be things like where you're currently working and how much you're making, if you have any other loans at the moment, so maybe any car loans or any student loans that you're paying on, and how much savings you have in your bank account to put down on the house. And they're gonna verify all this information later, so you can't just fill it in and hope that you're gonna get by and get approved for a loan that you can't afford. So once you get this filled out and sent back to them, then they're gonna process it and they're gonna send you back a pre-qualification letter. And what this pre-qualification letter is gonna say is it's gonna have the highest loan amount that you've been approved for. So maybe that's 200, 250, 300, and you could keep going. And then it's also gonna state on there how much that monthly payment would be at that max price. So if it was a $300,000 house, what your mortgage payment would be with today's interest rate. And again, this is great because now we know the maximum home price that you've been approved for, but once we know this information, we're gonna take it 2 steps further and we're gonna figure out what that monthly payment looks like. And if it's not a payment that you're comfortable making every single month, then we're gonna figure out, okay, how much do we need to come down in purchase price to get that monthly payment where you want it to be? So if you've been approved for $300,000, maybe we actually need to find a house for you that's $250,000 because the monthly payment is a lot better. Now, every mortgage and monthly payments do have their variables. Most importantly is the interest rate, because interest rates always change and that's gonna affect how much you pay monthly. And then other things like if there's an HOA or not, how much your home insurance is, what type of loan you're gonna use, and if there's private mortgage insurance on it or not. So that's if it's an FHA or conventional loan, and how much the property taxes are in that neighborhood and on that house. So the mortgage lender is gonna give you some estimates, and it's likely that they'll say, okay, you know, you've been approved for an FHA loan or a conventional loan, or maybe they'll say you've only been approved for an FHA loan, and if you put this much down, or if you put this much down, here's your monthly payment, or here's your monthly payment. Or if you go with an FHA loan over a conventional loan, here's your interest rate versus this interest rate. And they'll sort of figure out for you what the best move for you is financially, and then you'll be able to make the decision about how much money you want to put down. If you've been approved for 2 different loans, which one makes the most sense for you financially, and then you can go from there in figuring out, okay, for my monthly payment to be here, I've got to find a house in this price range. So maybe that's 250 to 300, or maybe that's 300 to 320. Either way, you'll figure out the price point of a home that you're going to want to buy, and then you'll know exactly what those monthly payments are going to look like. So the next thing that we're going to do is we're going to send your mortgage lender the supporting documentation documentation for the information that you've put on your application, because like I mentioned before, they're not just gonna approve you based on what you wrote down on that application. You're actually gonna have to send them proof. So you're gonna end up sending stuff like your W-2s or your 1099s if you're self-employed. You're gonna send a copy of your previous tax returns and then bank statements to prove the money that's in your account right now. So what this is gonna do is it's gonna take you from being pre-qualified to fully pre-approved. And this is super important for you as a buyer, and here's why. Whenever you receive the pre-qualification letter that you got from submitting the application, there's a section on that pre-qualification letter that they send you that states whether or not they've already verified your income, your tax returns, your credit, and a few other items. And whenever that initial pre-qualification is sent back, all of those boxes on the form are checked no, because they're only going off of what your application said. However, once we send them all the supporting documentations and they verify your tax returns, they verify how much money you're making and what your bank statements are with how much savings that you have on hand to put down on the house, what that does is it means that they're able to update that pre-qualification letter, and it basically means that now you're actually pre-approved, and on those boxes, each one of them is gonna be checked yes. Now again, the importance of this is because that on that pre-qualification letter, if everything is initially checked no, and you use this to submit an offer, which you can, when the seller gets the offer, they're gonna see that none of the information that you provided the lender has actually been verified yes. So they're gonna see that you have been pre-qualified to make that purchase. However, you haven't actually been pre-approved because they haven't received all of your documentation. Now, if you're buyer number one on that house and it's your dream house and you love it, but you haven't actually been pre-approved yet because you haven't sent them your documentation, and then buyer number two comes along and they have already been pre-approved because they have had all of their information verified, and you submit your offer with your pre-qualification letter, but everything says no, and they submit their offer with their pre-approval letter and all those boxes are checked yes. If the offers are pretty similar, the seller's probably gonna feel a little bit more comfortable going with offer number two and buyer number two, because they know that the lender has already verified all of their income and that they have the money and that they're approved to make this purchase. Whereas you, buyer one, you've been pre-qualified, and based on the information that you provided them, you are pre-qualified to make that purchase. However, they haven't verified anything. And again, when a seller receives an offer, that's the only financial piece of information that they're going off of, is that one piece of paper that says that you've been pre-approved and that all of your income and your assets have been verified. Whereas if they haven't and they get that offer and none of your information has been verified by the lender, it just looks like you haven't taken that next step to actually getting pre-approved. And this is so important because it could literally make the difference between you getting your dream house just because you were a step or two behind from that other buyer who was ready to go and you weren't. So when your realtor tells you to make sure that you're sending the lender your supporting documentation, which the lender is gonna ask for initially, it's hugely important that you actually do this and you get them that information, because it can make the difference in you getting your dream home or not. So the question that I get all the time from my clients is, Wes, when should I go get pre-approved? When should I start that process? Is it too early? Is it too late? And I talk about this a little bit in my home buyer timeline video, which you can check out below. And essentially what I say in that video is this: if we want to start going to look at homes on, say, October 1st, that we should allow for maybe a week or two to get fully pre-approved, which gives you time to submit your application, get the lender all of your supporting documents, and that's going to have you ready to roll pre-approved by October 1st. And that makes perfect sense and it works. However, the other thing that I tell my clients is, look, if you're even planning on buying a house in the next 3 to 6 months or even a year, it's never too early to go get pre-approved. Let's face it, we have to know where we stand financially whenever we're thinking about buying a house. And a lot of times the fear of the unknown is what stops people from starting the pre-approval process early, even though they should. And a lot of that is, do I have enough money right now? What is my credit score actually? Am I gonna be approved for a loan? Is it gonna be an FHA loan, a conventional loan? How much money am I gonna have to put down? Do I have enough money to buy a house right now? There's so many questions that we all ask ourselves when we're trying to plan out the process of buying a house. And a lot of times we just don't wanna think about it, and we just wanna think about the actual home that we're gonna buy. And so then we hop on Zillow and we start looking at homes and we just forget about the whole financial side of it anyways. However, we have to know how much it's gonna cost us to buy a house and if we've been approved and what those payments are gonna be. And the biggest concern that most of my clients have when it comes to getting pre-approved early is their credit. Like, if I get pre pre-approved now, isn't my credit score gonna go down? And I don't want it to go down if I'm not ready to buy a house yet. And the answer to that is yes, your credit score is probably gonna go down a few points from them running your application. But in reality, here's why that's not always actually a bad thing. If you're worried about your credit score maybe being on the lower end right now, and if you get pre-approved and they run your credit, it's gonna go down even more and you don't want it to go down anymore. The flip side of that is this: once a mortgage lender has an insight on your credit score and your credit history, they're gonna be able to see where you stand right now and how much they need to get you higher, so how many points they need to improve that credit score to get you pre-qualified for the loan. Now, this can take some time. It can take 3 months, it can take 6 months, sometimes it can take up to a year. And if you wait on getting pre-approved until the last minute and then you find out you're not actually pre-approved or your credit score isn't high enough to get a better or a lower interest rate, and now you're gonna be bumming that you waited too long to get pre-approved, when if you had started a few months ago or a few months earlier, maybe you would have had a little extra time to improve your credit score and get you approved for the loan that you want. And on the flip side of that, maybe you have a pretty good credit score right now. So maybe you fall in the good to great range on your credit, and you don't want that score to go down by them running your application because you know you have good credit right now. But with this, it's kind of the same reason that when the lender has access to your credit history and to your credit score, they may tell you, hey, look, you've got great credit and here's where we can approve you right now at this interest rate. However, we've got 3 months, and if we can just get your score up maybe 10 points, and here's how, now you're gonna be able to qualify with a 0.25 lower interest rate, for example, which again is gonna save you a lot of money monthly on your mortgage, and over the life of that loan, it's gonna save you a ton of money having a lower interest rate. So even if you have good credit right now, it's still a good idea to submit that mortgage application early, because your credit score may go down in the short term just a little bit, but over the next 3 to 6 to 12 months, you're gonna be able to bump it up 20 to 30 points, and that can end up saving you a lot of money. And of course, if you think you have a lower credit score and you're not sure if you can qualify for a loan right now or in the next 6 to 12 months, submit that application early. Maybe you're surprised and you find out you can, or maybe you're not too far off from getting pre-approved and now you've got a whole year to bump that score up, and now you know you can buy a house at the end of the year. So that's why it's truly never too early to start this process of getting pre-approved and submitting that mortgage application, because you want to be prepared when the day comes when you're ready to buy a house. And maybe that's 3 months, maybe that's 6 months, maybe that's a year from now. You want to be ready to roll, and you don't want to have to spend another year waiting just because you didn't take the steps ahead of time. And that's going to wrap up today's video, guys. I know that there was a lot of information there on the pre-approval process and getting pre-approved, when you should start, what the process looks like. If you have questions, please go ahead and comment below, press that like button, and subscribe to my channel for more videos like this. Again, share this with your friends and family members who are buying a house right now or hoping to buy a house in the future. And if you're in Arizona and you're looking for a realtor, or you're relocating here from another state, please go ahead and check out the link below to my website where you can find all my contact information. I would love to help you out, and I hope to hear from you soon. Until next time, peace.